You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster Joe Benazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we exemplify customer focus, consistent technology, and streamlined solutions. Now NASDAQ is proud to launch the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VolQ uses only at-the-money options to provide a precise measure of NASDAQ 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. And now, get ready to hit the Option Block.
All right, everybody. That music can mean only one thing. It is Monday. It is noon Central. It is 1 p.m. Eastern. It is time to kick off our broadcast week here on the old Options Insider Radio Network, rested and still kind of full from the big Thanksgiving holiday. Hope everyone out there had a fun, a happy, a safe, a socially distant Thanksgiving. If you're outside of the U.S. here, we hope you had a fun week over there as well. Of course, the market's truncated last week, so no OB on Thursday, but we're back at you here on Monday to kick off everything and give you your full double dose this week of all things Option Block. My name is Mark Longo from the aforementioned network, as well as, of course, from theoptionsinsider.com. Reminding you, if you like what you hear, this show, anything we do throughout the week, and there's a lot of content hitting you there if you're not subscribed to the full network listeners. Leave those reviews wherever you get this fine program so new folks can continue to discover this program and indeed the network in the crazy year that is 2020. Keep those questions coming too. We love to hear from you guys, including for our next segment. You guys have really glommed onto this. I enjoy it too, quite frankly. It's a fun way to kick off our broadcast week. Let's go back a little bit. Let's go back to the 80s, dial that Wayback Machine, and fire up a little bit of the old theme song guessing game. This week's suggestion comes from listener T-Type. He says, hey, Mark, let's have some pity on these poor guys with the 80s theme block. If they can't name, and I'll redact the name of the theme he suggested, but they can't name this show, then they obviously never watched TV during the 80s. Thanks for the show. Keep the knowledge flowing. We will do that. And now it is time to see if they can name that tune. It is time for, as you put it, the 80s theme block.
Making your way in the world today takes everything you've got. Taking a break from all your worries sure would help a lot. Wouldn't you like to get away? Sometimes you wanna go where everybody knows your name, and they're always glad you came. You wanna be where you can see our troubles are all the same. You wanna be where everybody knows your name. You wanna go where people know people are all the same. You wanna go where everybody knows your name.
All right. Thanks for that, T-Type. Yeah, that's, shall we say, one of the easier ones. We didn't go to that one early on because that seems like an easy dip down the old 80s theme well. But you know what? Given the challenges we've had of late guessing these things, probably good to go a little bit easier. I'm guessing you guys probably know what this is, so we shall be charitable and go out first to our NASDAQ hot seat, where we are joined once again by our old friend from OPR, aka Options Playbook Radio, joining us this week, doing some double duty here on the NASDAQ hot seat, the one and only options guy himself, Mr. Brian Overby, the senior options analyst over there at Ally Invest. Brian, A, welcome back to the Option Block. Good to have you on the program. And then B, most importantly, can you name that theme/show, sir?
Well, definitely. I don't want to give it away to everybody, but that's the Cheers theme song, right? That's from Cheers.
Yes, that is Cheers. Yes, that's an easy one.
That's it.
Our listeners obviously wanted to have some pity on you guys. You, Brian, I'm not sure if you heard, but the last few weeks have been a little bit troubling. We've got a little bit deeper down the well with some of the more esoteric themes. This has been fun. I certainly have enjoyed it, but the guessing, not so much. So our listener, T-Type, having pity on you guys this week with a nice, easy one this week. Let's also go out to the land of St. Charles. We are joined once again by Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, A, welcome back to the program. And B, I won't even insult you by asking you if you knew Cheers, sir.
Yeah, that one was an easy one. Great to be here as always. Brought back memories of Sammy Malone, Norm, and Cliff.
Yes, all the good times of Sam, Norm, and Cliff. By the way, the spinoff, Frasier, obviously a very well-loved show. I ask you, think of this. Would the Frasier from Frasier ever be caught dead in Cheers? Probably not. So a little bit of a twist they made with that character. As we're going out, speaking of twists, he's twisted up everything. He's no longer a Chicagoan. He's way down deep in the heart of Texas again. He is the Texas meatball. Mr. Mark Sebastian from OptionPit.com by way of Carmen Lyon Capital. Mr. Meatball, A, welcome back to the program. And B, I also won't insult you by asking you if you knew Cheers, sir.
What is this show, Cheers? Never heard of it.
Ah, okay.
I have no idea.
You must surrender your 80s go-to card at the door here as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading, what is lighting up the markets here to kick off our broadcast week here on this Monday. It looks like mostly green, or I should say mostly green. I'm obviously colorblind today. Mostly red on the screen out there today, with the Dow leading the race to the downside, off north of 1%, closing in at 1.15%. The S&P, the Goldilocks out there, yet again, off almost 0.75%. And the NASDAQ, the laggard in the right way this time. NASDAQ only off not even 0.5%, about a little north of 0.4%. Seemed like a lot of this red on the screen was spooking folks a little bit earlier and keeping vol a little bit elevated. You know, not that long before showtime, most of the vol products were pretty much unched from our last show. Now it seems like the market has digested this new direction a little bit. They're probably a little surprised at first. They haven't seen red in a little while. It's been a lot of green of late. They were spooked. What is this color on my screen? But now that they're starting to digest this, the weight coming back on the old vol products. Even on this down day, we're seeing VIX kicking off the show. There was right around 21.25. It puts it down. Not quite two handles, but pretty close, about 1.75 from our last show. Remember, our last show was a week ago. We didn't have a Thursday episode. So this is going back a full week. So bear that in mind when we're talking about these rates of change here. A VVIX, aka the volatility of volatility, at about 108.25, puts it down also almost about two handles, about 1.75 points. Our old friend VXX, the product Everybody loves to fade. Getting a little bit of its fade on again, down to about 17.5, kicking off the show. That puts it down about half a handle from last week. And the newest addition to the volatility landscape out there, aka VolQ, aka the at-the-money vol of the NASDAQ 100 at about a 22.5. That puts it pretty much unched from where it was this time last week. You saw a little bit of fluctuation in it right before the show time. It had picked up a little bit, but it gave some of that back as the rest of the vol products did. And now it is exactly unched from where it was this time a week ago. And since we're talking NASDAQ vol, let's start out there in the NASDAQ hot seat. Mr. Overby, catch us up, sir. What has been lighting up the tape? What have the options folks been trading over there at Ally these days, sir?
Well, obviously, there's been a lot of volume going into the actual vaccine stocks. We've seen a lot of volume in those underlyings, and it's kind of odd because the kind of a lot of vol came in, or a lot of the orders were coming in to the buy side, a lot of call volume coming in. But overall, the market really hasn't seen that big spike up on any of those stocks. Moderna, obviously, being the one stock that has really exploded after their announcement of their vaccine. But that's where a lot of the volume has been recently. That as compared to what the normal vol has been around the marketplace. But yeah, that's really what we're seeing nowadays.
I know earnings season, traditionally a decent driver of paper for you guys over there at Ally. In fact, every earnings season this year has not exactly been traditional. We've been profiling a lot of the earnings volatility annihilation that has gone on cycle after cycle. It is being repeated yet again this cycle. So every earnings announcement is playing out a little bit differently. I'm curious for you guys over there at Ally, now that earnings aren't really the driver of vol that they used to, are earnings still a decent driver for paper, you guys over there at Ally, Brian?
They always are. A lot of people like to speculate. The one thing about the option trading, especially for the retail client, is they want something to happen. If they're not covered call sellers, they're looking for the underlyings that are going to move. And so probably see more volume on earnings than I would like to, ideally, because it's such a speculative trade for our retail clients. But that is always a driver of vol. And in particular, the FANG stocks. We got that 1 week where you have most of the FANG stocks that announce earnings. That's always a good trading volume week for us overall.
Well, since we're talking earnings volatility, and you are holding down the NASDAQ volatility hot seat this week, Mr. Overby, I'm curious your thoughts on what's going on out there in the vol landscape, in particular, this newest addition to the vol landscape, a.k.a. the hot seat you're sitting in, a.k.a. VolQ. I know you look at a lot of different names. I know you look at a lot of NASDAQ names as well. What are your thoughts on looking at a vol instrument that is focused on something a little bit different? We have obviously a lot of different flavors of S&P 500 volatility. Now we've got a little bit of NASDAQ vol getting added to the mix there, Brian. What are your thoughts on adding NASDAQ to the vol landscape, sir?
Why not? Why not? I mean, by far, they're the most popular stocks. They're the most talked about stocks nowadays. They drove us through this pandemic. Knowing just being able to take a peek at an index and seeing exactly where the volatility is for that marketplace is a wonderful idea. My question just overall is, why did it take so long? I'm not quite sure why this index or the concept of this index hasn't been out there for a long time, and just being able to trade that vol and use it to even protect some of those NASDAQ stocks is just wonderful.
Yeah, that is funny. I asked that myself many times. People always associate. It's kind of like the offhand in Bitcoin. We'll get to that obviously later today in the crypto rundown. A lot of vol going on out there in the crypto space as well these days, listeners. So stay tuned for that a little bit later today. But people often associate just in general NASDAQ with volatility. It's hard to blame them. The FANGs, as you mentioned, super volatile these days. They're obviously big components of what's going on over there in NASDAQ land. So it does seem, you're right, a little bit surprising that it has taken this long to get a vol product associated with this most volatile index. But c'est la vie, that's where we find ourselves today. Obviously, one of the other big talking points people have been pontificating on a lot with the launch of VolQ here, Brian, is this newest edition, or maybe not really new. It's kind of going back to the old school. It's going back to the old school as they term it, the old straddle run, right? You just go down to the pit, you get your straddle run, you get your at-the-money vol across all the months. That's kind of what they're doing here with the old vol queue as well. I'm curious about your thoughts on that methodology versus what we've seen in the past, which is, of course, something like VIX, which takes the at-the-money and also incorporates the skew and has had, shall we say, mixed success on that front. What are your thoughts on this newer / old methodology?
Usually, when you look at these indexes, they usually get better over time. Even the VIX changed way back in the day, if you remember. So I'm curious. I think it's good to implement vol skew overall, because when you think about it, that's what the marketplace is all about. It's all about when you're trading options, what happens when that option gets in and gets out of the money and how that volatility changes. So it's a big piece in the marketplace when you're looking at volatility. So why not incorporate it overall? I think in general, it's a good thing. And as we see the vol queue, I think succeed, which I think you will over time, maybe they'll be incorporating some of these measures in indexes like the VIX and other volatility indexes overall. That wouldn't surprise me at all.
I know you're getting more vol folks heading over there to Ally these days. You were telling me before, you had some interesting volatility and fly questions about volatility over there at Ally. So a lot more sophisticated crew popping up over there at Ally these days. Obviously, it's still mostly focused or entirely focused on the futures right now. But once they get the options listed over there in 2021, Brian, you think this is going to be a product that the Ally folks are going to gravitate towards on the options front at least?
Yeah, I do. That would be my guess. Now, overall, one of the things is, and you always have these questions about, is our hardest thing with the VIX is never having a quote on the actual underlying that represented the option contracts. Now, the Chicago Board Option Exchange came out with a futures index that kind of tracks those volatility indexes. And I think the word needs to get out. That's probably that's where I've spent most of my time, is explaining that concept, that the reason why those options didn't move when that VIX made that big downturn, like example, after the election. Well, why exactly did that happen and what was going on? And it's just understanding the product and how that product tracks the future. Once those people get that concept and grasp it, and it does take a while, I do think that we get a lot of people that will gravitate even more so away from things like the VIX. The VIX is obviously the most popular one that's out there, but towards something where that looks a little bit more like their actual portfolio, because most of our clients and most of our option volume in general is in the NASDAQ stocks. I had the numbers back in the day, and I haven't ran them in a little bit, but almost 50% of our volume comes from those underlying stocks, from maybe about 10 different underlying stocks that drive a lot of our retail public option volume, just overall.
Yeah, that is the case pretty much across the board, and certainly interesting to see. Also interesting to see what is lighting up his tape on this certainly not Uncle Mike day out there. A little bit of red on the screen. I gave him a little bit of a time to finish digesting his turkey leftovers. I think he's ready to go now. He's out of his tryptophan coma. So the unclest of Mike, sir, not exactly an Uncle Mike type of day out there, a little bit of red on the screen, but what is lighting up your tape out there in this kickoff to our post-holiday week, sir?
Well, I think that we're coming on. This is the last day of the month that is the most bullish month I think I was reading since 1987. Yeah. And that and a lot of this actually came. A lot of the rally actually showed up in probably the first 10, 11 days after the election. Because I think we hit around these numbers, I believe, on November 9th. And so from there, we've been channeling somewhat, but we've been channeling at a very high level. So I think today we're still well within the channel, and we're still within 1% of the all-time high, at least the intraday all-time high that we made back on November 9th. So we're still in a pretty high market at this stage of time. Some things that I'm noticing right now, we did have a little bit of a pullback in financials today. So that's kind of to be expected with the run it had last week, just referring to XLF, of course. Volatility, although we were a little bit higher earlier, we're back to just looking at the VIX. We're just up about 30 cents on the day right now. So not a lot of movement there. Where a lot of this seems to be coming from, and really, this isn't that much of a down day, quite frankly, but where a lot of this does seem to be coming from, we have energy down pretty decent percentage. So just looking at XLE, the ETF that tracks energy, it's down $1.45 from 39 to roughly 37.5. So that's fairly significant with where it's at. Of course, consumer discretionaries are down as well, not as much percentage-wise as energy, but they are still down. XLK holding things up a little bit. XLK, the technology, is actually positive on the day. So we do have, I guess, reason for hope for a little bit of a rally to maybe close November on a high note. But in reality, we're really not down all that much today. It's not, there's not blood in the streets by any means. That is what I'm seeing on my tape today.
You heard it here first from the mouth of Uncle Mike. There's blood on the streets. Panic. Sell your portfolios. Hide the women and children. Put the gold. Bury it in the backyard. That's what we're seeing out there today. If you have questions about that, of course, hit up Uncle Mike. Those don't come from me. Come straight from the mouth of the one and only Uncle Mike. And, of course, let's go back down to Texas. Mr. Greasy Meatballs, sir. Obviously, there was a little bit more vol on the screen. I should say really vol maintenance. Vol kind of holding in there. Now kind of giving up the ghost now that we see what direction is on the tape. What is lighting up your tape? What are the crazies in the pit chat trading? And then what are the Little John, the Robin Hood folks? What are they up to these days?
So let's talk about AMD, which is absolutely exploding higher in both volume and in price. It is absolutely taken off like a rocket ship today. It's over $92. The option volume has absolutely exploded in the contract this week. This is the one Little John caught. It was, closed below 87. It's now over 92. I'm not a lot. I don't see any news out there, but it is absolutely catapulted higher. Apple looking strong. So we've got a little bit of the stay-at-home trade, maybe from Fauci's comments over the weekend. A little bit of the stay-at-home trade, still kicking it right now. Not sure how long that lasts, but AMD in particular has lit up our tape in that there is just a massive amount of volume in the December 4th contract. Other areas we're seeing pretty heavy volume. We're still seeing a ton of volume in Pelletier. NEO, a lot of the EV, the Chinese stocks across the board are down. And the reason being is the House put out a bill saying, hey, you know what? We may delist every company in China that doesn't follow GAAP standards for their accounting. And that is causing every single, major Chinese company to kind of take it in the chin. And so that's the other piece of news. Yeah, you've got LI down, XPEV down, you've got NEO down. It kind of across the board, it's an ugly day to be a hot Chinese company.
A hot Chinese company indeed out there. Are you surprised, Mr. Meatball? Because I know a lot of the Little John / Robin Hood folks, it makes sense. They're flocking into the Fords and some of the other smaller, cheaper names because they traditionally have smaller accounts. Are you surprised that they're also slinging an AMD, which is closing in on a hundo? It's about 92 and change out there right now. So that's a little bit pricier for the Robin Hood folks. Are you surprised that they're trading this one?
I was very surprised. Then I looked at the volume and it was all the 90 calls, and it was all expiring this week. When AMD was about $88, there was about, at the time, there was about 50,000 of the 90 calls that had already traded against open interest that was, maybe 15,000. So we've seen giant trading in that name among these Robinhood traders. And, the way they get around these expensive stocks, is by piling into stuff that expires in 3 or 4 days. And, the trade that we put on was the 89 calls, and we were able to get it for this week, and we were able to buy them for what, $1.70, $1.65, $1.75, and just kick back and wait a little bit, and they're $4. It was, it was like when you see that kind of volume, that kind of near dated gamma, the amount of pressure that will put on market makers as the underlying rallies to raise vol, raise the delta on all their out of the money calls, and thus need to buy more stock, it can be pretty darn astounding. And that's what happened here.
Yeah, we talked about it before, the notion of the upside crash, but there's a lot of things, a lot of components to that. And some of that is the market makers just running out of their inventory as you keep blowing through their short strikes and have to jack things up to get it back. And the Robinhood crowd seems like they're masters these days at causing that upside crash across the board. So if you're fortunate enough to identify these names early and get in before the Robinhood mass drives it all north, then you're looking pretty good. Let's see what's looking good out there in the broad markets today. Like we said, a sell-off, but not a huge sell-off out there. Let's see if that's driving any paper. Coming into Showtime, we got VIX at about 177,000 contracts. So that's not a lot of tape, or I should say not a lot of paper on the tape out there right now as of a few minutes ago. A SPY at about 2.25 million contracts. The ADV a little bit north of 4, about 4.1 million. The S, 719,000. There's actually decent paper out there in the S. The ADV is about 1.1 million. The Q's closing in on 500,000 contracts. The ADV about 1 million exactly. So roughly half a day's worth of paper going up out there already. And IWM, so our old friends out there in small cap land, at about 308,000 contracts. The ADV 651. Let's see if the Robinhood folks can continue to make our top 10 topsy-turvy these days, adding a bunch of new names. That seems to be the case. We got some newcomers here, or at least names we haven't seen in quite some time. Number 10, a stalwart, American Airlines. By the way, it cost you 282,000 contracts to break into the top 10. So the indexes may not be lighting the world on fire, but the single names are extremely active. This is as active as we've seen them in quite some time. Usually it costs you $1.30, maybe $1.40 to break into the top 10, pretty much 2x that today. So a very active day. I get you all the way to American Airlines. Number 9, ACB. This is Aurora Cannabis. Going to be seeing like a little bit of a theme here in some of our top 10 here. 338,000 contracts on the tape. Let's see where good old ACB is right now. Let's see if that qualifies as a route. $12. So yeah, I think that would probably meet several of the different demographic qualifications for the Robinhood clientele out there. Number 8, good old Nikola, 348,000 contracts on the tape. Number 7, Sundial, going back to the growers out there, SNDL, 389,000 contracts on the tape. Number 6, Pfizer, already over 400K, and we're only at number 6 list. That's the kind of day it is. 430,000 contracts on the tape. Number 5, NEO, 509,000. They're making some deals. There have been some rumors for a while of that deal being scuttled with them out there, and GM, that seems that is indeed the case. The stock taking it on the chin out there. Let's see where they are right now. Stock off about almost 5%, about 51.5 out there. Palantir, number 4, the, shall we say, controversial software name. One of the better Tolkien licensing deals out there as well. 654,000 contracts, almost as good as our Eye of Sauron, but I digress. Number 3, AMD, 780,000 contracts, and not even enough for number 1, no sir. Number 2, it's Tesla, 946,000 contracts. That means number 1 is the big dog, the fruit company, 1.5 million contracts, listeners. Just lighting it up, maybe some post-Black Friday love. Did you go out there, get your deals on your iPhones or perhaps your iPads? The deals on Apple stuff usually aren't that great on Black Friday, but I guess any deal on an Apple product is worthy of note, I suppose, because 1.5 million contracts on the tape. Let's look really quickly. Our most biased paper out there today, coming on the Pfizer side of the fence, 95% of that 409,000 contracts coming on the call side. I take that back. Percentage-wise, Sundial is eclipsing even that, 97%. That is certainly the most biased paper we've seen in quite some time. So 379,000 of the 389,000 contracts coming on the call. So no one wants to put in Sundial. Wow, that's impressive. That sounds like that might be a little bit of the old Robinhood effect. Let's see, by the way, oh yeah, Sundial, if you're wondering, it's 66 cents, up about 30 cents. Mr. Meatball, is this one on your Little John radar here? Sounds like it might be soon.
Yeah, no, you know what? It's one that popped in. We don't typically put out for 66-cent stock. We'd rather probably just buy the stock.
You don't track the options flow on things you could buy with pocket change?
Then buy a bunch of dime options that are probably going to go out worthless. But there are a few of these that we have on our kind of like long-term radar for names that are going to be, we think interesting with the Robinhood crowd. So we do build a little inventory. One of the things I really want to track, I haven't started this project yet, is the performance of the stocks given away for quote unquote free by Robinhood to the Robinhood traders that open up new accounts. The ones that are really popular on their giveaway list. What is the relative performance of those names? My gut says those names do really well. One example, just anecdotally, I can think of is both GE and Ford were extremely popular giveaway stocks for opening up a Robinhood account. Another one was U.S. Steel. We'll give you here's a share of U.S. Steel for $8. Well, guess what? It's like $14 now. Ford was $4 and $5 when they're giving away. It's $9.5. GE was $6 when they were giving away. It's over 10. So it's kind of fascinating to see what these the performance of some of these names when Robinhood starts giving them away.
That's interesting. Certainly interesting as well as the price action in this sundial. This thing, people are trading options and saying it was trading 14 cents less than a month ago. Of course, if you go back a little bit farther, you go back to January of this year, it was trading $3.50. This thing has had quite the sordid tail over the course of 2020. So obviously it's up quite a bit from where it was, but also a far cry from where it was not too long ago. And obviously our options folks liken this name to the tune of all the calls. I have to dig in a little bit and see what the heck they're trading out there, because you're right, 68 cents. I hope the Viceroy, wherever he is not listening to this episode, because he will be deeply offended. People trading options on a 68-cent name. A lot of names popping off in the earnings front as well. If you want all those breakdowns, you know where to go, theoptionsinsider.com. We got Zoom today. That's a big one. We got Salesforce tomorrow, Box as well. Wednesday, going out to more retail. We got Five Below. Got also Snowflake was a hot one for a little while there. We'll see if it's still hot out there. Thursday, Uncle Mike's other favorite outside of Cisco. That's Dollar General. You got Kroger, TD out there, Duluth, easy for me to say, Duluth Trading Company, Cracker Barrel, Marvell, a bunch of names. And Friday, you got Big Lots. If you want the breakdowns for all those earnings move result, and indeed the ever so important earnings season report, you know where to go, theoptionsinsider.com. Now it's time for us to go into our next segment. It is time to go to the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, let's do it. Let's get weird. Let's get wild. Let's get whimsical. It's time to unleash the eye of Sauron. See what it brings back to us here on the old Odd Block. It's going to kick it off in a name we talked about once or twice. It's been a little while, though. This is Global Payments, Inc., ticker symbol GPN. Trading right now $193.77, off about 3.25, or a little over 1, about 1.5%. Not exactly in the Robinhood price range, but these days you never know. Doesn't stop them from loading up on some crazy upside calls. Before we get to that, though, let's see what our friend has been up to this year. An interesting year. A year ago, they were trading 178, so obviously they're north of where they were there. Then, of course, they peaked for the year at about 208.5 on February 20th. And we all know what an auspicious day that was, listeners, because it all kind of turned to the dark side. So they're probably more inauspicious. It dropped. Looks like it bottomed out. Let's see, almost half of that, down about 105.5 in the Great Nadir there around middle of March. So got cut pretty much in half. Rebounded pretty quickly as people realized, hey, people have to actually pay for stuff online these days. So a little bit of a rebound, got to 152 pretty quickly. By March 26th, it was trading 152 again. So regained a lot of it. Then it gave it up and got it back and gave it up and got it back. And then it topped out, I bet you can guess when, listeners, 189.78 back on June 8th. And then it kind of hovered around there for a little bit, threatened it a little bit. Then it kind of gave it up again and never really threatened it again. And it sold off again recently. back to about 156 again back on October 29th. Then it had a bit of a rebound here, a bit of a resurgence, and it started to rally and got up to that June 8th level and surpassed it again on November 9th up to 193 and change. And now we find it got up to 198.83 last week even, and now kind of selling off a little bit from that high down to 193.75, where we find it right now. That's where our sordid tale leads us to this. What did our Eye of Sauron find? Well, I was only joking earlier about the Robinhood calls. It actually was puts, and looks like they're decently out of the money, decent near-term puts. We've got 11,327 of the DEES 170 puts going up for 42 cents. This market was fairly wide when they went out. They were 35 cents at 70. So obviously they found a little bit of price improvement. They actually got a decent price here for over 10,000 of these things. So that's a decent little market there. Went up actually on the NAM, the NASDAQ options market over there. 42 cents, 11,327 times. Worth noting, there are no earnings in this cycle. The next earnings announcement is on February of next year. So they got a little time here for GPN. Mr. Greasiest Meatball, a.k.a. the Texas Chili, over there. This looks and has the feel of a bit of the old line in the sand put, a.k.a. your cohort there, the Rock Lobster's favorite trade. Do you concur with that, A? And B, if so, what are your thoughts on this particular line in the sand, the DEES 170 line in the sand for 42 cents in Global Payments, Inc.?
I mean, it's a couple of weeks of yield for 42 cents. I could think of some stocks that I think would give me a little better yield, or some strikes that may be a little better yield than collecting 42 cents on a $170 stock. That's a ton of margin. So, not my favorite trade, but maybe these are a put purchase to protect somebody on that side, and the broker, they got the broker they paid a hefty commission to get the broker to sell it to them at that level, which would maybe make a little more sense than this as some sort of premium collection play. Just because collecting 42 cents for a couple of weeks sounds great until you realize that each option is going to carry a 17 grand in margin. I mean, even on a margin account, the yield is not going to be very, very good. So, if they bought it as protection, sure. If they sold these, I don't know that I'm a huge fan.
Yeah, I'm not overly enthused, really, either way. This went up. It's about a 37.5 vol, if you're wondering out there, listeners. You're right, not a lot of juice. People always forget the carry cost that goes along with selling puts. They think it's just a free lunch. I want to get my 42 cents. There's a lot of 11,000 contracts in a $170 name. That ain't cheap, listeners. Even in these zero rates days, there's still a cost associated with that. So you're not exactly pocketing all that 42 cents out here. But yeah, you're right. It doesn't really super excite me either. Maybe we won't come back to that one. But, I prefer perhaps a little bit more nuanced approach to my trading. Hint, hint. That sets up our next trade here. We've got Nuance Communications, ticker symbol NUAN, N-U-A-N. I do believe this is a newcomer here to the odd block. Ticker symbol, like I said, N-U-A-N, trading 42.68 right now, off about 4 cents. So not really a huge underlying day out there. This is a multinational computer software tech company headquartered in Burlington, Mass. If you're wondering, this is Nuance. They do like the Dragon Naturally Speaking and all that fun stuff. They also say they focus on artificial intelligence, but obviously they do a lot of speech recognition there as well. Let's see, trading right now 42.68. A year ago, a hell of a lot lower, 17 double out there in early December of last year. So quite the ride this one's been on. It rallied up to about 22, almost 23 in February. Then it sold off again down to looks like about 13.5 in the Great Nadir. So it wasn't a huge drubbing really for them. I mean, compared to certainly they rebounded fairly quickly. Let's see here. Within about early April, within a few weeks, they're trading 17 again. And this has just pretty much been a straight up line. Every other name we profiled here on the odd block seems like this year had a little bit of a rally up to June 8th, and they kind of sold off again. This one's been just trending up ever since. People obviously doing a lot of at-home dictation, using a lot of the Nuance software out there. Either way, just pretty much straight up. A little bit, got up to about 35.20 back in early October. Then that's the only real downtime in this chart. It sold off a bit down to 31.5 on November 2nd. And it's been pretty much rallying ever since, and a big rally from about 34 and change up to looks like 42.5 there just last week. So obviously probably a little bit of earnings popping off there. So Nuance on the tail end of a pretty good run here for pretty much all of 2020, bucking the trend. Very aggressive and pretty much nonstop V-shaped recovery after a little bit of a sell-off there in March. Let's see what our eye of Sauron found out here today. It looks like it's DEIS, but on the DEIS call side this time. Looks like someone may be thinking the party is over in the near term. We shall see. The DEIS 47's going up for 18 cents. It's a couple of cents off the bid. They were bid for 15 cents. Offered way north there at the lofty heights of 35 cents. Going up 8,760 times, this time over there on the MIAX. If you're wondering, that's a 34 vol, 34 even there, listeners. So looks like Mr. Texas Chili. This has the whiff, the air of a bit of the old post-earnings overwrite, getting a little bit of juice out here. Not a ton, but some juice. Worth noting, the next earnings cycle is in February as well, so no earnings in this option cycle. Mr. Meatball, same question, kind of similar to the last one we just profiled. Not that far out, not a heck of a lot of juice. What are your thoughts on this one, sir, as a premium harvesting type trade?
Yeah, if this is premium harvesting, it's bad crop. Let's just put it that way. I don't like this at all. I think your return relative to, what you're kind of putting up is not there. This would be another one where I wouldn't be surprised if a customer paid a hefty commission to get in on these calls for 18 cents. And then they were crossed. I don't entirely know, but I hate trying to harvest premium on an 18-cent option. I just don't. The risk reward there is just completely not worth it. I can think of a lot of better things to do.
Looks like we're 0 for 2 in the Meatball's eyes here on our premium harvesting. I got to say I concur with. I'm not overly enthused by either of these. Here, let's see if our final one can make up for it here. Let's go back to, you're always asking for us to review the names we've talked about. This is going back in our Wayback Machine, all the way back about a month to October 29th. We talked at the time about what looked like someone perhaps getting their hands caught in the cookie jar, selling some aggressive puts in Humana and deciding to roll it, keep the party alive. At the time, we profiled about 3,200 of the Humana OC 420 puts going up for 14.5 through the offer. The stock at the time was 407.20, so obviously they had broken aggressively through that 420 strike that they had sold out there. But rather than take their lumps, they said, you know what, we're going to do this again. They went out and wrote 3,217 of the NOV expiring on the 6th. So going back out to the weeklies, but keeping it meaty, keeping it deep, the 415 puts. Kind of interesting. So they were still pretty sizably in the money. And those went up for 16.05. So they did the spread for pretty much 155 out there. So at the time we looked at it and we said, I don't know. This one, sometimes you get your hand caught in the cookie jar this aggressively. Maybe you kind of just got to take your lumps. But this guy or gal, we don't know. Seems like this trade worked out pretty well and it had good timing to boot out here. So keeping our track record of line in the sand puts all doing pretty well. This one also looking good. This one worked out pretty much immediately. It's like the stock heard the show and said, okay, we're going to go in the opposite direction, because this stock took off. And by a few sessions after this, by Wednesday the 4th, the stock was trading $452. So this thing just took the heck off. Obviously, there was a little bit of earnings baked in there as well. They rolled that line in the sand put through earnings. They were pretty convinced that the earnings would go their way and that would drive the stock through. And that's pretty much what happened. The earnings were on the 3rd of November. The stock was at $452 the next day. Not surprisingly, they didn't bother to close these bad boys out. They were still open on the 6th, which was their expiration date. These were the weekly calls, remember, or so weekly puts. So these guys looks like pocketed about $500,000 for their diligence out there. Mr. Meatball, what are your thoughts on someone going back to the well yet again? A put that kind of blew up in their face, said, nope, I'm going to do it again. And this time it worked out pretty well, sir.
Well, the sun shines on a dog's rear end every now and again. And, this guy clearly had done his research, done his work, or girl. And, he ended up getting away with this one. So props, but not exactly my favorite form of risk management, unless their goal was to collect or at a certain point to take delivery on this name.
You don't teach doubling down in your option pit risk management course. If you don't like it, just do it again.
Yeah, no, we're typically telling people to take money off the table, not throw more down. And that's Paul Tudor Jones would be mortified at the doubling down on a loser. But every now and again, this person has had a high conviction. And props to him for getting out of this one.
There you go. And props also to Uncle Mike, because it's his time. It is Monday. It is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, listeners, it is Monday. That means it is time for Uncle Mike to come. Mike, easy for me to say. Time for Uncle Mike to come on down from the mountain, stone tablet and bubble pipe. Let's go back to that old saw in hand to dispense some options, wit, and or wisdom. Uncle Mike, which or perhaps both do you have in store for us today, sir?
I always go for both, and I gotta say I haven't had the stone tablet and bubble pipe in a while.
Yeah, we're going old school.
Pretty soon we're going to bring back the smoking jacket for the man who doesn't smoke.
You're right. And then the mini medals will be back and it'll be all like it's old times again.
For sure. What I want to talk about today is that with markets at the high levels with which they are right now, let's say that you are looking to get into a stock and you're just kind of concerned that you don't want to buy the top. Who does, obviously? And so with that, what's a way with which you can risk manage a situation like that? Well, there's a few things with which you can do. You can sell an out of the money put to get into the stock. We've talked about that a lot on the show. We can do a 1-by-2 ratio spread with puts to where if you want to get paid a little bit on the way down and then own the stock at a lower level, we can do that. But today I want to go another route with this. We've all heard of scaling into and scaling out of trades. If you don't like if you're kind of concerned, maybe do a half position. And there's a lot of ways with which you can do that. But let's say that you like XYZ stock. It's maybe had a little bit of a run up from 40 to 50 throughout this rally in November. And you still want to buy it at 50, but you're just kind of concerned with putting in a full position on this. Well, one thing with which you can do is you can buy a half position. Now, by buying a half position on the stock, of course, you have half the risk. Now, unfortunately, the downside to that is you'll have half the reward. But what you could do, let's say normally you were going to buy 200 shares of the stock and you just want to buy 100 of it. If the options are available, one thing with which you could consider is a 1-by-2 ratio call spread. So what this trade would be is step one, you could buy the stock, 100 shares. Step two, and you can actually do this in most brokers, you can do this all in one trade, but I'm just kind of going through it one option at a time so we can kind of understand it. Step two, you can sell the 55 covered call for, let's say, $1. And I'm making up numbers here, and it's XYZ stock, so it always works out perfect with XYZ stock. Not always this way in real life, but definitely something to look at. And so by doing that, you now have a $1 credit. That money is yours now, always, and forever. Until expiration when the obligation is fulfilled. But the $1 is yours to use immediately. So with that, let's say that the 50 calls are trading at $2. What you can then do with that $1 credit with which you have is you can buy a 50-55 call spread. Because of the fact that the 50 calls are trading at $2, the 55 calls are trading at $1, thus making the cost of that spread $1. So essentially what you're doing is you're using the covered call premium to finance the cost of a call spread. Now, what does that do? Does that add any downside risk? Not one penny at all. Now, of course, if you get out of the option trade early before expiration, there are some things that could happen with volatility and things like that. But we're talking about XYZ stock here, folks, and that does whatever we want. We always get out of that expiration, of course. But with that, what that does do is you are creating double leverage on the stock from 50 to 55, meaning that you took on half the risk. And now, if you wait till expiration, you will have twice the upside between 50 and 55. Now, of course, the disadvantage is if the stock goes to 126, you're not going to be a part of it. You're going to be maxed out at 55. But remember, this is for a stock that you're looking to buy. It's at a higher level in your opinion, but you still like it. But you don't want to put everything into it. You want to take on a half position, but you kind of want to hedge yourself in case it goes up right away, and you want to have something there. So I like this strategy to use in occasions like that, or I like it as a stock repair strategy, which we presented on the show before as well. So a 1-by-2 ratio spread can do a lot of things for you, and that's just another way with which you can use it.
Thank you for that, Uncle Mike and Mr. Overby, since you're sitting in the old NASDAQ hot seat again. I know you pontificated once or twice on your own program about ratio spreads. You also like to throw in your preferred strategy, which is, of course, the old skip, strike, fly, a.k.a. the broken wing, a.k.a. call it what you will. What are your thoughts out here on when Uncle Mike was just talking about ratio spreads and perhaps their use case in these crazy markets, sir?
Excellent. Yeah, I always love to talk about skip strike butterflies, otherwise known as broken wings. In the options playbook, we call it a skip strike because that's what you're doing. You're doing a regular butterfly and you're literally skipping the strike that you would normally buy and going a little bit further out, away out of the money and buying another option contract. And it's a lot, what you're really doing overall is selling a credit spread, as Mike mentioned, and paying for a butterfly with it. So one of the things, a lot of people think of it as an alternative to the butterfly, but I like to talk about it and have talked about it on Options Playbook Radio as an alternative to a credit spread. So a lot of times in this marketplace in particular, where we have so much volatility just in all underlying stocks and also in a lot of the vol indexes that has just been hanging around stubbornly, as opposed to just selling credit spreads and having that risk of being short a credit spread, I like to think about doing a skip strike butterfly out of the money, much the same as a credit spread, or that I would approach on selling either a short put spread or a short call spread. I want to get it done for a net credit. You won't get as much of a credit, but you automatically have that hedge built into that trade, and that you actually have a butterfly that if the market starts coming towards your short strike on your ideal of a credit spread, then that butterfly will kind of help you out. You're going to have that long spread to go along with the short spread that can give you a little bit of protection if you're wrong on your forecast. And so, like if you're looking in the NASDAQ and you're thinking about doing a short call spread or a short put spread, and you're going to go out of the money, I'd say lay down until the urge goes away a little bit, because there's just so much volatility in the marketplace. And if I'm thinking about that, explore skip strike butterflies as an alternative to the short spread, not as the alternative to the butterfly. And I've been talking a lot about those on Options Playbook Radio lately.
There you go. And now it's time for us to talk about what we're keeping an eye on as we roll on into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Time to tell you what we're keeping an eye on our trading screens as we go here throughout the rest of the week. We're going to have a second episode on Thursday this week, so we can come back and catch up with you again on Thursday. Let's go around the horn. Let's go back out to the greasiest of meatballs, a.k.a. the most Texas of chilies, a.k.a. the spiciest, the most flavorful of barbecue briskets, Mr. Mark Sebastian. Mr. Meatball, sir, what are you keeping an eye on for the rest of this week until we can gather here together on Thursday, sir?
Well, there's some earnings going on, and we keep having kind of these surprise vaccine newses or, different type pieces of data. I'm going to want to hear what the retail stores are selling over Black Friday. and Cyber Monday. I think that's going to be a pretty big news driver. So those are the kind of the major things on my radar. And then are we going to trip a new all-time high in the S&P? We'll see.
We shall see indeed. Mr. Uncle Mike, sir, what are you keeping an eye on here for the rest of this week until we can gather here together on Thursday?
Seeing if we can hold the 3,600 mark on the S&P, and just watching the tech stocks like the Apples of the world, as well as energy. Energy had a lot of movement today, so watching the numbers as per usual, and of course seeing what the results are from Black Friday and Cyber Monday, because I think that'll be a big part of what the market does. And who knows, we might get another vaccine in the near future. You never know.
You never know as well. And Mr. Overby won't be joining us on Thursday, so give us, of course, folks can get their hits from OPR from you later this week. But what is on your radar for the rest of this week, sir?
Well, I'm actually looking for the markets to actually show some of this volatility overall. Like if you look at the SPX, we've just had so much chop in it. It's got to go somewhere. And also the NASDAQ, we do see that we have the IWM or the Russell 2000 index leading the way, which is good overall. But the other indexes are just in the doldrums. And I'm looking for some type of move in some direction. And that's actually where some of those ratio spreads that we talked about on the show could apply. So that's what I'm looking for in the marketplace, is to get the actual volatility that these volatility indexes are showing. I'd like to see a little bit more movement going forward.
More movement, Mr. Overby wants. Unfortunately, if you want more show, that music means you're not getting it, at least not right now. Listeners, of course, if you're listening live, stay tuned, pump some fun stuff in. We'll be back in exactly an hour with a great guest to break down all the crazy madness that's been going on in the world of crypto. If you didn't watch Bitcoin last week, 3,000 handles at a clip. Craziness. A little bit of vol. Maybe if Brian wants some vol, he should head out to the crypto space. Certainly some vol, so stay tuned for that. We'll be back live in exactly an hour to break all that madness down, pump some fun stuff in there in between. If you're listening after the fact, just hit next on your device of choice. You'll have it queued up there for you. Before we do that, let's go back around the horn. Brian, you did an able job holding down the NASDAQ volatility hot seat out there. So if you are, or folks, I should say, are interested in learning more about what you guys do over there at Ally, or what you're up to over there as the options guy, where should they go? What should they do?
Well, you can always just follow me on Twitter. That's probably the best place. I've been tweeting a lot lately. So if we have any educational events, I always like to highlight them there. And that is very simple. It's at Brian Overby. So make sure you follow me there. And then also, if you ever want to send a question or whatever, it's the options guy at invest.ally.com. And obviously, check out Options Playbook Radio right here on the Options Insider Show.
There you go. Check them out. OPR. Aaron, usually on Wednesday nights. Now, getting out there earlier to you these days, so stay tuned for that. Give him a follow on the old Twitters as well, at Brian Overby, OVERBY. And you know where to go if you want to learn more about all things VolQ, NASDAQ.com/VOLQ. It's pretty easy. It's got all the data there, the info, the contract specs, all that good stuff, and a whole bunch more. Check it out if you're inclined and interested in the vol market, and I'm guessing a lot of you are if you're listening to this show. NASDAQ.com/VolQ. And if you're interested in volatility, Mr. Meatball, you may have a thing or two for them. Where should they go? What should they do, sir?
Yeah, if you want to learn, if you want my commentary on the VIX and overall markets, make sure you're a subscriber to the VIX Edge and the Pit Report. Over the weekend, I wrote up the fact that, I think by the middle of this decade, options are going to be the dog, not the tail on the stock market, and laid out a couple of reasons why. And then I'll be putting out some VIX content tonight, so make sure you're subscribed to all of our email lists. Go to optionpit.com and sign up.
There you go, optionpit.com, the place to begin your journey. And if you want someone to hold your hand, maybe put on some of those ratio spreads for you, Mr. Uncle Mike, where should they go? What should they do?
stcharleswealth.com if you'd like to learn a little bit more about what we do. We're financial advisors, and we are not afraid of the option product. stcharleswealth.com.
He ain't afraid of no options. St. Charles Wealth is the place to go. And on behalf of the Unklest of Mikes and the greasiest of meatballs and the optionsist of guys, to make up a word, and indeed myself, And, of course, my friends over there in NASDAQ land. I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in your questions. Keep them coming. I see your thoughts about Mandalorian and everything else. Keep them coming. We'll talk about them later this week. Don't you worry. Stay tuned. We got some hot stuff coming in the land of crypto options. A lot lighting it up out there. So we'll be back in exactly an hour for that. Of course, tomorrow we've got Interview Tuesday again. Wednesday, Brian will be back with a little bit of OPR, as well as, of course, Options Bootcamp. That twofer makes for our Education Wednesday. And then right back again on Thursday with another episode of the Option Block.
The Option Block is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we exemplify customer focus, consistent technology, and streamlined solutions. Now NASDAQ is proud to launch the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VolQ uses only at-the-money options to provide a precise measure of NASDAQ 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.